Buddy Brian Shannon from alphatrends.net. It's Friday, the 21st of October. Let's take a look at this market for the week. The S&P 500 gained a little bit, as did the Nasdaq, the Russell, semiconductors, and it was really just the Dow that was down for the week. And let's take a look at the charts so we can make some more sense of it. The S&P 500, as we said, was up just a little bit, but it's still below a declining 10, 20, and 50-day moving average. That's reason for concern, and it's also below the volume weighted average price since Brexit. That's the purple moving average that you see right here, and that it's been trapped under that now for the last week and a half or so. Let's just redraw that on there, and that tells us that the average price paid since Brexit is above where this market currently is. But when we back it up to the weekly time frame, we still see, of course, that this prior band of resistance is holding as support. So we see that there are continued mixed messages in this market, and with earnings really in full swing right now, we've got mixed messages because the Nasdaq is still within just a few points of its all-time high here. We saw this week that stocks like Microsoft are up at all-time highs, going back to even the 2000 highs and beyond that. So, with Microsoft at all-time highs, and then you've got stocks like Netflix had a great week here. There's still a lot of mixed messages in this market, and the Nasdaq is definitely continuing to outperform here. We've got a trend line that may or may not become important next week. That's something to keep an eye on. But from an intermediate term standpoint, we made some decent ground here in that we gapped up above the 5-day moving average, and we have now this is going to be an important higher low for next week. We're going to want to see the 117-ish level hold. Back to the S&P from an intraday standpoint, we've got this prior band of support acting as resistance in here too this week. So next week, it'd be really nice to see this market get back above 215 as a starting point, because then we will have this as potential for support below us. But we still have that declining 50-day moving average up ahead, and it's difficult to trust rallies in the index. But again, with such good action in stocks like Google, Google's up at all-time highs here, Facebook up at all-time highs. There's still a lot of things to be bullish about this. We saw earnings today from PayPal. PayPal is one that we've spoken about at length in the past because of this short position, and now this stock, it's not a surprise to see that it gaps up and closes right at the high of the day, because those short sellers are they're in a pretty bad spot, let's say. Anyways, going back to the Nasdaq, this market is in better shape, and we want to see 117 hold for the week. The Russell 2000 continues to be a little bit weaker here, and on the daily chart, you can see we're fighting with the volume-weighted average price since Brexit, and has been holding, so it's relatively stronger, and we've got this bigger band of potential support just below us. However, again, with mixed messages, we see a declining 10, 20, and 50-day moving average. So as I tell subscribers, when we have mixed messages like this, it's best to focus on individual stocks. We still have an open position in First Solar, which was something that I had shared on a Wednesday video as well. First Solar, it's still in a longer term downtrend here. It's not something I don't think that can be trusted, but for swing trades, we're still along a piece of it with a stop just under yesterday's low. So that one behaves well, and we have to be aware of when earnings are due out for the companies that we're trading. So Russell 2000, we'd like to see this one get back initially at least above this 122.50 and hold above that level next week. If it can do that, then it's starting to behave better. But it's not clearly out of the woods. But again, with mixed messages, we back up to a bigger time frame, and we see we still are in this longer term uptrend. So perhaps this is not going to be, if we break down a little bit from here, it's not going to be a disastrous thing, but that we're correcting a little bit more through time and digesting the gains the market has seen. Because certainly you look at something like the semiconductors, and this group has continues to perform remarkably, even when we saw that Intel lost ground this week, and Intel gapped down and continued lower for the last 2 days. And that's again that shows the risk of the earnings season. But one stock doesn't make an index. We had the semiconductors gap down on Wednesday when Intel reported, but the volume weighted average price since that event in the semiconductors, we're holding above it. So there's been net buyers of the overall index. It's not just about Intel, and these semiconductors. If we can get back above and hold above 68.50, then it's most likely going to continue on to new annual highs once again. I would only be concerned if we were to get below and hold below 67 for that group. And the biotechs continue to be the disaster. They are trying to stabilize in here, and you could make a case for a short-term trade maybe above this level if it was to make a higher high above that flat to what would be rising 5-day moving average. However, when we look at a bigger picture, and we still see that you know, this looks like the most likely, first price target. But going to the daily time frame, we've just got a mess here. We've got a declining 10, 20, 50, 100, 150, and 200-day moving average. If they don't scare you out on the way down, they'll typically wear you out in the basing process. And it's going to take a lot of time for the biotechs to really be considered recovered. The shares of Apple this week, we're below the 5-day moving average, so it looks like a little bit more of a pullback, perhaps down towards a 20-day moving average next week. It's still structurally in good shape on a daily and weekly time frame. So I think that for Apple, it's going to need to get back up above 117.50 and hold. Then it can get some upward momentum. But I wouldn't be surprised to see a drift lower next week and then start to stabilize and move back higher. The bonds, are starting to stabilize in this area a little bit. This is the area where that we would expect them to find some stability, as it has been prior resistance. So maybe the worst is behind them, at least for a little while. But I certainly wouldn't trust rallies with all these longer-term moving averages still declining. We spoke about some of the stocks that had a great week, and going forward, I think that next week you could look at shares of Baidu as a possible upside candidate. This is something I've got an early eye on. We've got this bigger triangle forming. We're right back to the middle of it, and we can now see that all the moving averages are flattening out. So in this period of compression, I think we're getting ready for a bigger move. Be aware, of course, of when earnings are due out, and don't get blindsided by earnings. But this stock has the possibility of maybe getting going a little bit from here, as does Monster Energy. It does have a declining 50-day moving average, which I'm not thrilled about, but it has the potential for maybe getting going a little bit, up beyond that 150-ish level. PANW is Palo Alto Networks, and this one had a large decline earlier this year. It stabilized. It's back above some prior resistance and the longer-term moving averages. It's starting to stabilize near that 50-day moving average, and I think that for early next week, maybe you see a little bit of a pullback and then it gets going. But again, be aware of when earnings are due out. It's tricky to be holding in front of earnings. You can sometimes do really well with it, or other times they'll just obviously completely implode. So that'll do it for now. Hope everybody had a good week, and enjoy your weekend as well.